Good day, everyone. All right, let me get this link shared out, and we're going to get into the charts. I've got a very bullish chart live on the screen here. Of course, there's always other possibilities, but we're going to be talking about some of the bullish cases in this live stream, how I plan to trade around them. Live stream link here, everyone. And share this on Twitter too. I hope you're all doing well. All right, as some of you know, my primary thesis was bearish, and I closed my shorts, and I'm cautiously quite bullish here. And I'm going to go over a few scenarios for the bullish case, some with local pullbacks, deeper pullbacks, down into the 58K region. I think if we start losing this back at the middle of the range, looks a little suspicious for some of the bullish cases, taking this low at 58K. But I'll go over those details or those ideas in more detail. Yeah, a couple little questions. I guess some of the members are going to have some questions because I had a local short setup here. So as I pointed out on Twitter, when I say that I'm bullish, this is switching from a swing thesis of revisiting the 42K region, and maybe I'll recap that, but I'll do it maybe near the end of the live stream. But I'm still looking for a pullback, and maybe I'll go over that. Maybe I'll go over the local case here before I go over the high time frame case, just because there's going to be some members curious about that. You are correct. There are some bearish divergences forming locally. This is here on the 15-minute chart in order flow. So let me just give some context to everybody that's not a member, just so they know what we're talking about here. In the Discord, I'd shared a couple ideas. One of those ideas was, let me go into, I'll just kind of show where it originated. So right here, just for anyone tuning into the live stream, we're looking at the members Discord, and I have it divided into Bitcoin high time frame, medium time frame, low time frame, because obviously you could take a short on a low time frame and it's not applicable to the medium or higher time frames. Just kind of trying to keep the ideas separate. I do a lot of updates. But anyways, this was back before we took these highs, just kind of identifying this channel idea, some ideas for a long setup into this. This was actually an idea for trading against my primary thesis at the time, which was bearish until we took this high, which got taken shortly after. But anyways, what I had shared back here, I need to even remember if this was in the high time frame or low time frame channels. What I had shared, it's in the low time frame, was this idea of coming and front running the all-time high, and then a short setup back into these local lows. So the idea was this, right? Let me just go back a little further to when I first started talking about the idea. So this is, again, a local setup. Just running up into this channel idea, coming and taking all these highs, but not the all-time high, and then just running back down. And there might be a local short setup there. And there's a few ideas for this that maybe I'll talk about here. But this is what I'm about to be referencing. So first, I'm just talking about this local short idea that a member is asking about, just to give some context here. So this is in the low time frame channel, these updates. I was just pointing out this local idea, and maybe I'll talk about the targets a little bit here as well. So yeah, just yesterday, I was pointing out that there's really big longs coming in here. And I just said it looked like a news event. Like this just happened in a couple minutes. We had tons of shorts closing, really big longs opening. I just said I'd be willing to short into this local target here. Off of this channel. We'll go back to the charts in a second and I'll pull it up. And then those longs closed immediately. So this was just a 5-minute candle, 179 million longs. I'm saying I want to short this. I want to fade this aggressive longing. And I said it. I don't know what's going on, but it looks like the kind of thing that happens at a news event. This isn't kind of typical price action for this type of area on the chart. And I guess there was some MicroStrategy news that doesn't make any sense to trade this way. I said not short yet, but we'll consider on a rejection here. This was last night. I was going to sleep really early in the morning for me, giving a little order flow update. And then I just said, to be honest, I really don't feel like taking this short. I have to go to sleep, and this, this 5-minute chart, I might put on a little bit of risk. But anyways, I went to sleep. Here we are, and now we're going to go to order flow real quickly, then back to the trading view chart. So the member's asking if there's bearish divergences forming here. They aren't extreme, but there are, right? So we have our initial high getting put in here, a lower high, a little bearish divergence in CVD, another local bearish divergence in CVD. It's not bearish against this high. And so there's an idea here of shorting this lower high into a local level here. Now, it's not maybe the most compelling short, but there are some structural ideas and some liquidity ideas. But I don't think it's completely unreasonable. But maybe what I'll talk about here is we'll go to the trading view chart quickly. Let me pull that folder up. All right, go to the 1 hour. Okay, so there's some ideas here. Let me actually come back out to the 4-hour chart. There's some ideas here of front running this all-time high and putting in a correction down into the, this is a pretty clean parallel structure. It's not perfect. It's more perfect if you pull it from here. Putting in what would be a higher degree 1-2, which is what we're going to talk about in the higher time frames. So putting in a higher degree 1-2, there's two major structures below us, which is this ascending structure. So coming down, the $68,300 region, wiping out some liquidity, holding up this ascending structure, running the highs. And there are some ideas of breaking out here, but I quite like the idea of running the highs and putting in an expanded flat for our 1-2, and I'll put that count on shortly and go over some of those ideas. But I'd suggested that there might be some ideas, and maybe I'll go over the logic of this. Back here I said, there might be some ideas of watching for a rejection, taking all these highs, but maybe not the all-time high, and trapping a lot of this liquidity, targeting the all-time high breakout, running that liquidity one time before another move up. And there might be some ideas of shorting a sweep of these highs, invalidation just being a breakout into the all-time highs, into that idea. So we're kind of seeing that now, right? There's going to be a lot of people betting the house on the breakout. You come and wipe out the liquidity, and then you have the move up. Something like this is still a 7% plus retracement from the wick of this high, and something like this would be like a 15% retracement from a failed breakout. So my current local plan here is to look for long setups down into this level, be willing to trade a failed breakout, but be willing to take profit as a short, and at the very least as a hedge against longs. And then swing long into this level here, around 64,300. I'm going to go over that. But anyways, so this is dividing the time frames. This is all kind of lower time frame ideas. This along from this level is a higher time frame idea, and I'm going to cover it when I go over the higher time frame ideas and what makes it high time frame. Now, it's important to remember, I think I want to cover a few things. One being, there's going to be a lot of people tuning into live streams like this, or especially reading Twitter updates, that the way they trade, they're not really traders per se with invalidation risk management, is they place a bet on just what they think price is going to do maybe over the long term. That they might classify themselves as an investor, right? And so for them, it's really important to be right about, is price going to go up or down in the next 6 months, 1 year, 20 years, whatever the term of their quote unquote investment is. I look at that as a trade, right? I look at that as a trade, but just without any invalidation. And the reason it's important to them is if they buy here, if they take a long here, they will hold it all the way down to, I'm not saying Bitcoin's going to zero, but to zero. They don't have invalidation. It's just, I think this is going to go up. If it goes down, they're like, well, I think it's just going to go down and then it's going to go up. And it keeps going down. They could be down 50%, 80%, and they would say that they just have conviction, right? I would say that it's poor risk management because there's no reason to stay long at a certain point when you can just wait for a cleaner structured setup. I'm going to be talking about that. And it's the same thing with shorts, right? I had a short here, and I shared this on Twitter. I had a thesis of putting in from here, a bullish move up into this 67K region, looking like a higher low, a lower high, and I had some technical targets at 42K. For me, I was kind of bullish for this idea, bearish here, willing to short, but my invalidation was taking the $70,000 high. And so there's no reason for me to stay in my short if this is being taken, right? I don't have conviction in the idea from the sense that I'm just going to stay short. And I think we're going down. I think Bitcoin's bearish. It's structured as this idea. If this isn't happening, part of that idea is holding this 2021 as a high, as resistance. If we're breaking out of that, I'm not going to stay short. I can always get back short in the future if I see a good reason to, for a swing short idea. But I'm just going to close it. And I'm not going to have conviction in my short as price just goes higher and higher. We're at 100K, we're at 150K. I'm not going to say, you know what, I think we're going to get back down to 42K. I have invalidation. The same is going to be with my long ideas. I have technical ideas that I'm going to talk about that I want to trade long, but they have invalidation and I'm going to limit my risk, right? I'm going to have lots of opportunities to get long. And this is something I talked about in the Discord yesterday, and maybe I'm going to talk about it a little bit here before I share these ideas, because this could give you guys a sense of what the trading environment could look like over the next several weeks or months. And the idea is this, people, it's kind of a meme a little bit, but say you have long ideas for this, you have a short idea for here as a trader, you get stopped out your short, and then you just flip to a bullish thesis, you take some longs, maybe some of those win, maybe we rotate back down and people say, oh, you got bullish at the top. You can come out of all of this with a lot of trades, a lot of winning and losing trades. And even if you lose, you have your risk managed. But there's a feeling that people get of getting sidelined, right? Like, oh no, I closed all my longs here, and I actually have 10% of my longs running from lower, but I need to, for the bullish case, obviously be looking for opportunities to long. But they feel like they're going to get sidelined, and they kind of throw all their plans out the window and say, I was wrong. I thought we were going to reject, and now I've missed all my opportunities to get long. I just need to long anywhere. I need to get long anywhere. The reality is there's so many opportunities to get long. And so what in the bullish case, so what I wanted to point out, and I can talk a little bit about how I traded this, is let's go back to this whole run up here earlier this year, and just imagine that you had no longs running up into different parts of this chart, and we're going to look at how many long setups there are. So I covered about it was like a 12-day period, 18-day period, and how I traded this, because I took shorts and longs into this price action. So let's just go to that really quickly. And this is just to remind everybody that you can literally be short for a small section of the chart like this and then just flip long on clean setups and just print, right? You have longs, you have a short, and people will clown on, taking a short here, but I've probably taken, I've taken many hundreds of trades if we count scalping, but 30, 40 winning trades in this price action. And some of the shorts are going to win, some of them are going to lose, some of the longs are going to win, some of them are going to lose, but you have this beautiful range to trade. And so it's kind of the idea of trading the range until it breaks up or down. I think it's much more likely to break up at this point. All right, so hopefully this is going to, what I'm about to explain now is going to give you guys a little bit of context for how I'm approaching the chart here. All right, let's go here. So this was a series of posts I did yesterday in the Discord. I said, the image attached as the first section in this first section are from my updates at the end of February, around 50K. I'll explain the relation to the series of posts in the next post. I want to write a series of posts for everyone that is newer to trading or feeling extreme FOMO because not in swing longs from lower on Bitcoin as we test a potential breakout, worried they will miss the move. Now, this isn't going to apply to everybody in the Discord, but if it applies, it's really easy to start feeling like you just start making irrational decisions if you see a breakout happening and you're not long. So I said this post isn't about a specific setup, it's about a principle. It's about adopting and understanding that there will always be amazing opportunities on the chart. Even some of the most experienced traders here will be feeling some of the drag of the last 10 months of ranging and forgotten what opportunities present themselves, and I should have said even what those look like, during trending price action. But I can guarantee that if you have asked any experienced trader here or elsewhere if they regretted giving into FOMO or despair when quote unquote missing a move, they will say they had they been patient, there was always just another amazing setup around the corner. I want to be clear, FOMO isn't defined as a breakout trade or any type of trade. I define FOMO as taking poorly structured, poorly planned trades based on fear, right? FOMO stands for the fear of missing out. You're making an emotional decision, a trading style that is going to get wrecked. So I gave this update. I'm going to go over this in the charts. This was at our 50K range. I'm going to go over. So I started off trading this range. And the funny thing is, I actually got multiple winning trades here. This was about an 8-9 day range. Shorting this, longing this, shorting this, longing this. And then I ended up holding this long. And so I just wanted to go over this. So this is back February 21. And then my next update was I want to be make it clear, no reason to get particularly bearish while this range is holding and selling is being absorbed, simply preparing in case we break down. Because I'd shared a setup. If we break down, I get stopped out my longs, I'll look down here, but until then, I'm just sitting long. And I'm going to show where this is on the chart. As of now, I'm looking for a bigger move through the range highs. This was my update on the 26th. As we start impulsing, this is at 50K. And I want to show what this looked like on the chart at the time. I'm looking for a bigger move through the range highs as the more likely scenario, given the very defined bullish absorption we are coming off of. And then here, as we broke out of this kind of 52K range, I said nothing to do here for me except sit in my long while we are holding the breakout. Nice, easy start to the week. Have a great night. So this was back, updates from back then. This was from here, right? This was after a parabolic move up. At the very top, we had this little condensed range of a few percent. I had longs from the lows of that range. We had big bullish absorption, and we got this big impulse to the upside. So I said, so my point here is, you could have felt like, oh my God, I've missed every long. I'm not long here. There's no long setups. There's perfectly reasonable structured trades here. A little bit of patience, looking at, if you miss a quote unquote miss a trade, that's fine. Just look for a clean setup. The setups here to get long were there, right? And you have something like a 14-hour trade to the 57K impulse that came right after that. I mean, I remember all this price action. and a 40-hour trade if you held up near the top of the impulse towards all-time highs, right? But so what I want to point out here is even had you missed that trade, my next post is this. It's my belief that I will always be able to identify amazing opportunities and execute trades around them from anywhere on the chart. I'm never afraid to miss a move or be sidelined, even if you missed the setup at 50K. Here are some updates from 60K before we made our all-time high. Again, there were massive bullish divs, clear structure to keep adding to longs, multiple longs to all-time highs. So I was looking for this long on a retracement. I got that long. These are different ideas I was trading towards all-time highs. Just showing as we pushed all-time highs, this long. So this is after the next impulse up to the upside. We start ranging here, big bullish divs, nice retracements in targeting all-time highs. I even added to this long. I did a live stream right here, by the way, and we were just front running the all-time highs. I said, it's we could literally just front run this. I had a long setup for sweeping this into the all-time high, and I had an idea to short a failed breakout of the all-time high, and I actually took this on the live stream. I went live here at our first test of the all-time high with this short setup. Now, I took losing trades too. I'm going to talk about some of those shorts I took, but this is just talking about the long setups in this range to all-time highs. Now here we have the first setup. It already looked like you missed your opportunities. Here, it looks like, oh, I've missed my opportunities. There's still amazing long setups, short setup here. And even had you missed all these, you have this big wipe, right? This big wipe. We had our first all-time high. People forget this big wipe down into 58,000. And we're going to look at some of these tests of all-time highs relative to the on the chart now and what we might look for at this test of all-time highs. There were so many long setups in here. I ran so many long setups. But just to point out, even here on the daily chart, it looks like I've missed all my longs. There were clean technical setups all the way up into these highs. I won't read my little dialogue here, but because you get the idea. But my point is this. Stop thinking in terms of the moves you've missed and just look at the chart for what it is, right? And take a reasonable approach to the trades you make. I said, and even if you'd missed all of that and missed the sweep and the V-shape from 59K, here's a 4-hour long and a 6-hour long right into the new all-time highs. There's never a reason to feel like you've missed your opportunity. Keep in mind that every one of these trades shown from the start of this thread until this point in the thread was taken over 12-day period. In that time, price went from 50K to 69K, straight back down to 58K, and then back to a new all-time high. Already, in a condensed 12-day period. There is no way to have planned all of these trades beforehand and to have predicted that, yeah, in the next 12 days, we're going to go straight up to 70K, straight back down to 58K, straight back up to 73K. But there were tons of clean setups. I said the context of this chart shifted so dramatically, so many times, there was never a way to plan out how you were going to trade all this when price was at 50K, before all-time highs. But there were reasonable trades to structure around the new price action. So then I was just sharing this setup, I'm going to show it on the chart in a second, which were these ideas. We had this big V-shaped recovery. We had this retest here, big bullish divs. This was a big liquidity wipe. This targeting a new all-time high. And we have this big wick into new all-time high. I was on a live stream here as well. I did not take that short. This happened. This was like 15 seconds and then straight back down. But then the point is, here was a new setup to all-time highs, right? This was a new setup to a new all-time high. And so as a trader, these are the kind of ideas I'm looking for, right? Clean structural entries, invalidation. I could have got stopped out of these trades, but this pays for 4 losses. This pays for 6 losses. This pays for 4 losses, right? That's the idea. You're risking a determined stop loss for a determined target. And so what's funny is here's just another setup. So I'm going through time, right? Look how many longs I've taken in this 12-day period from 50K to new all-time highs. I took shorts as well. But the thread's not about shorts. But for example, I did short. I said I actually shorted the first all-time high, but I'm just saying how many long setups were here and how many trades were here. This was another long setup. And here's another long setup. I said, this is an update back in March. So we make that first new all-time high, and I'm looking for this low to get taken down into this level. My next update is currently have this long prepared on a reaction, willing to get stopped out to test another all-time high. Price comes down into that level, took the scalp long off the reaction. I TP'd quite quickly off of that, but then price carried on. That was this idea, right? Come down to this wick. Here's another long. And then I shorted 73K as a swing short. And so then I ended this, and at the time, this was my update at 73K, looking for a move back down to the lows of the range. I was getting dogged on Twitter for that idea. But here's the post I gave at the time. I said, I shared this on Livestream, sticking it in here as I think there are some important ideas if we start breaking down higher time frame bullish structure. POC isn't marked as important. I think it is, blah, blah, blah. Below that, we have this descending structure. And so I just gave the thesis for a big move down through all these lows that we just ran up to our first all-time high in March. And my short setup that I was taking, I'm hedging out my longs with a short at the top of the range. It's at 73.8K. Might trim if we sweep local lows. Prefer to have a short up here and miss the actual sweep while sleeping. But the stop loss was still very tight here, like something like 1% or something. Because even here, I did a scalping session and I had more longs. I had more longs from into this new high, just trading up into the top of the range and just showing that marketed in everyone. That was that long I took, targeting this. I'm pulling these screenshots from an old session. And so my point is, you can get really caught up in just being like, oh no, I've shorted 67K, got stopped out, and now price is going up. And you kind of forget how many opportunities there are. And we're going to get to the live chart in one moment. So I said, I'm going to tag everyone. I say sorry because I don't want to spam people with too many tags. But people have members request that I just tag so they know the post is there. I said, if you're logging in and wondering what these updates are, start by clicking here. That takes you to the start of the thread. But the point of this thread is this. Even in the context of price being straight up, 360% from the lows, 200% from the last major retracement, and I'm showing this chart right here, right? This little section of the chart is all of those trades I just shared. Look how many perfectly reasonable and well-structured long setups there were. There's never going to be a point on the chart where you can't print. Just identify the setups where the chart is today and execute with risk management. And I said one more point that is very important. Never be afraid to completely adjust your perspective based on what is happening. Like I pointed out, all these trades I just shared happened over an 18-day period. And actually took more trades, by the way. Those were just some of the long setups and the higher time frame. I didn't even go into all the scalping setups, and we had some really amazing scalping sessions in there. The only way to navigate the price action is to assess what is happening each day. Sometimes you are going to have a plan that stays relevant for weeks or even months, but if price is doing something else, you need to adjust to what is happening. So that's what I'm going to be, that's the context. That's the context for what I'm about to share here on the live chart. So what we just went over, again, was all of this, right? And the kind of cope that you get in, people say, like, if you say you're short or say you're long or say you're whatever, people will say things like, tell me you're sidelined without telling me you're sidelined. So I want to talk about some of the losing trades I took. I had a major target from much lower here at 57K. We ran into this 57K and I took a short here. When we broke out, I didn't even cover these trades. I got onto a live stream here, and what was this, like a 10% impulse to the upside? Yeah, it was about 10%. And I traded this long. I took profits. And this is where I got long. So got long, took profits here, shorted this move, and the next setup's long, 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 long. And so it's for me, this short setup looked like this. And I got stopped out running beautiful longs. And then what do? I just flip back long. And I end up with longs, longs, longs. Take profit on the failed rejection. You can go watch this live stream if you want on my YouTube. I did it live and I shorted this live. And then after this, long, long, long. And so there's people through all this. When I took a short at 73K, I took it because I thought it was a reasonable thing to do. We had bearish divergences forming up here. I saw all these lows to get wiped out, and I actually marked out all of these pivots perfectly. It doesn't really matter, whatever. And there's lots of longs and short setups in the context of this range, lots of different ideas. So there's going to be people who have just been sitting long here with no defined risk for 10 months. Well, I've taken tons of trades in this, and they'll post if you're short that you're coping, even though you can just get back long if resistance breaks, and there's going to be plenty of opportunities to do so. And so the same thing here. Yes, I took a short here. I stopped out this short, and now I'm going to be flipping long the same way. I had a long setup from down here, but I'd closed a lot of my longs into this impulse, and then this is where I flip back long, right? So that's how I'm approaching the charts here with defined risk around key structure. So let's go over some of those ideas now. Let's get into it. And I'm going to pull up a lot of different stuff on the chart. We're going to have some fun. All right. Let me read through some of the comments really quickly. Can I chart Caspa? You know, I can chart Caspa. I actually have pulled up a chart on it already, so I have some context for it already. I'll do that later. Just remind me if I forget. I want to cover Bitcoin first. People asking where I live. Can you please go over Doge? Yeah, I can go over Doge. What if short fail and stop loss re-enter big price? Don't know what that means. That was a question. Re-enter big price question mark. Not sure what you're asking. Someone said it's called gambling. Yeah, it is gambling, right? It's gambling with an edge. So if you think about it, I'll just touch on this quickly. If you go to a casino and you're playing roulette, you know, there's a lot of house games where the house has a 51% edge. It's 51.49, and they're gambling too, right? If you place one bet on a casino opens and they say our strategy is we're going to place one bet, one roulette wheel, and then we're either going to close our business in profit or open it in profit, or close it in profit or close it as a loss. They're gambling. They have a 49% chance of just losing money with their business and a 51% chance of making money. The casino is gambling, but they have an edge. So what they know is if we take thousands, tens of thousands, millions of small bets, we'll just win. It's the law of large numbers. We have an edge, right? That a casino won't let you play so big that you'll bust them. So there's a bunch of math you can do. They can say, what are our chances of losing 20 consecutive roulette wheels relative to our wins? Well, it's pretty low, but that number gets much higher if we let somebody spin the wheel 100,000 times. Then we're going to take 20 losses. So what is the max? This is how they manage the risk. What is the maximum amount we can allow people to be betting? And there's more complicated ideas around this because you have to average out all the bettors and whatever. But they know that if they let people, they're placing a bunch of small trades essentially on the roulette wheel. They're saying, we're going to take a ton of small trades, allow lots of people to bet on the roulette wheel, 49.51. They have a chance to win. We have a slightly more chance to win. And in the end, we're going to print unlimited money because we can bankroll. We can bankroll that roulette wheel. We have enough capital to pay for the losers and know we're going to come out ahead. So in a sense, gambling's the same thing, right? You're saying, well, I can get 4-1, 5-1, 6-1, 8-1 on my risk. I can risk 1% to make 8%. I can risk 0.5% to make 12%. Whatever the ratio of your trade is. I know I'm going to take losers. I know I'm going to take winners. but I have to bet small enough that I can bankroll my losses. So a standard in trading is 1%. You risk 1% of your capital on a trade. So just to put this into context, if this is your long setup, you would structure this. If the stop loss is 1%, the math is easy. If it's 2%, you could say your half of your portfolio would have to be in the trade, and then you're risking 1% on the trade. And so you're risking 6 to 1, right? 6 to 1. If it works, you get paid 6 times more than your loss. And you do that a bunch of times with a bit of an edge in the market, with some asymmetry in your trades. You don't need asymmetry, but it's a good way to exploit an edge. And suddenly you get the one winner, and now that pays for your next 6 losses. So now you're trying to structure more good trades. You're going to take 2 losses. So you made 6, you lost 2, you're up 4. You take another one, you make 4. So now you're up 8. Then you lose 3 trades. Now you're only up 5. You get it, right? And over time, you're looking to be that roulette wheel that is exploiting an edge. And there's lots of ways to do that. All right. So I'm going to keep reading comments, and then we're going to get into the ideas. Someone just says, wow. Someone says double top doesn't get easier than that. What about hedge long with short both have 1R? Yeah, that's kind of a complicated topic, but I mean, you can't just trick your way into an edge, like just hedging one short, one long all the time. Let one get stopped out, let the other one print 5R. It doesn't really work that way. Both can just get stopped out. You have to still plan hedges. Someone says, I feel FOMO all-time high, to be honest, because I took profit on my spot Doge long, looking for another long entry. Now I'm worried it just runs without me. Yeah, that's always going to be the concern, but like that's the fear-motivated trading, right? Is, oh, I don't have a short and price is going straight down, so I'm just going to short the bottom because I've missed my short. It's like, well, you missed your short. Like, let's just say, for example, you say, I was going to short here, but I didn't, and then I was looking for a re-entry, and I'll just short here. It's like, no, that short setup's gone. You missed the trade, but there's going to be new setups to trade, right? So don't worry about the trade you missed. Just plan your next trade. And if you're always taking a trade based on the premise of, I missed a good trade, so I'm going to take a bad trade. Sometimes that's going to work, right? Sometimes it's going to be like, okay, I'm just going to close my eyes and hit buy, or close my eyes and hit sell, or short or long. Sometimes that's going to work, but if you base your career off of basically, imagine you had to pitch your trades to somebody. This is what I would encourage people to do, is you work for a hedge fund and you have to explain your trade. You should be doing this. Write out your idea, write out your trade, and then document how you're executing it. And you tell them every day, you show up and you say, guys, I missed this great trade. I don't know what to do. I'm really scared I'm going to miss this move. Can I just get long here? Can I get long here? You're going to get fired in 5 minutes, right? If that's how you approach your presentation every day for how you trade. Instead, say, this is my idea. I'm waiting for this. This is how I'm planning on executing it. If this is the risk profile of my trade, if price does this, I'm going to cut the trade here. If it does this, I'm going to hold it till here. It doesn't have to be a technically structured trade that way. It could be a fundamental thesis, which is, listen, this is the company. If we have, if this doesn't go to plan, we're looking at a 40% downturn maybe in the stock before I cut the position or I allow that kind of leeway. And I'm looking for a 300% gain. Well, in a way, that's just a trade, and a lot of hedge funds are just going to allocate a certain amount of their capital to that trade to keep the risk managed. They're not going to say, okay, let's put $8 billion into that trade and maybe lose 40%, or maybe the stock goes up. They'll put a small amount of capital in that trade, and then they'll look for other similar setups. You can still manage risk if you're trading without a hard stop loss under the local low or something like that, right? You can just do it differently. will you be prepping some longs before 65, 58K targets? I'm going to go over that. I just want to go through the comments. There's people asking for altcoins. People ask me to check something. Can you check C-Pool? How long are you in the market? Blah, blah, blah. Looking for Doge. Okay, let's go over Bitcoin. I just want to see if there's any questions about what I just talked about before we move on. All right, so I had a bearish thesis. I'm going to talk about the most bullish counts, the most bullish ideas. So I'm using something called Elliot wave here. You don't have to use Elliot wave. There's other ways to structure trades. I mean, I think I could find these structures without even any Elliot wave ideas. But there's some ideas of us being in the whole idea of my target down here was that we hadn't finished a wave 4 correction. I think it's kind of hard for anyone to dispute that this is a wave 1, 2, 3, and wave 4 is just a big question mark. I had some ideas of a wave 4 coming down into this low, tagging this retracement. I'm going to clean up this chart, by the way. I'm just going to talk about the concepts here. And there were lots of cool structural ideas of coming down to this 41K low. But now, if I'm going to say, well, okay, I'm going to flip bullish. I'm going to say wave 4 is done. Wave 5 is coming. And if so, then maybe this is a 1, A, B, C, 2. And maybe there's some ideas of forming a 1, 2 subwave. Well, then instead of me just saying arbitrarily, where do I think price could go? Where do I think it will go? Like people will say I think we're going to 90K. I think we're going to 100K. I think we're going to 85K. Price could go anywhere, right? But if I'm going to use Elliott wave and I'm going to start taking trades based off of the bullish case of this being a potential nested 1-2 here, then let's start pulling some hypothetical targets. Now, of course, people are going to say it's too early to pull targets. I'm talking about the most bullish case and what I would expect to see, the type of thing I would expect to see if this is a 1-2. And it starts to look like a parabola straight up, right? That's what it starts to look like. The question isn't, is price going to go higher whether we retrace here locally or not? If we break out of this high, price is going higher. The question is it going to wick above the high and go straight down? That's a failed breakout. That's part of my local setups. I think the question here, price goes to 80. The question the whole way up is just going to be, how high is it going to go? 80K, 90K, 100K. Well, I'm just going to pull fib extensions. And so the way I've done this here, it is speculative. I'm not going to deny that. I've color coded the fibs. Is I pulled this big potential parallel structure. There's some stuff on log scale I want to look at it as well. And I want to say, because my current idea right here is to get long if this is a subwave 1-2 off of this potential 1-2. And there's some ideas here of running the high and then coming back down to this low. Well, if that's the case, then 1, 2, I can pull this hypothetical fib extension. If this low comes in, what are the targets for the wave 3? Well, let's start looking at 98K for a subwave 3 as a potential target, right? Let's start looking 90K, 98K, and then we have some ideas of, we put in our wave 4 retracement, and then we have a big extended wave 5, putting in our lower degree wave 3, and we start seeing there's a lot of alignment at certain levels for different fibs. I'm not going to go into all of the trending extensions here, but we start aligning a lot of fibs, 1-to-1 extension at 130, the 1618 of a purple degree at 130. 2618 is up around here. We start having 1618, 1618 orange in the gold degree here. If this plays out, our 50% retracements align with our 1618 extensions of lower degree waves, and we start seeing that there's all this confluence for this type of parabolic move. There's really nothing else to use at this point other than fib extensions, hypothetical fib extensions, and retracements, right? To start getting a feel for what a big parabolic move out of a 1-2, 1-2 from wave 4 would look like, and we have some structure. Am I going to hold to this as the gospel as we start breaking out? No, I'm going to see what structure actually forms up here, but this ends up looking something like Let me clean this up a little bit. This big kind of parabolic move up into this 150, 160K region as a high. And I just want to point out that then if that is the case, then we have this big ABC wipeout into, you know, taking this low at 48K down into like 45K into the 786. Man, that looks pretty clean to me. If we come in around here, 786 aligns right under this low. We come back and retrace through this wave 3 and 4. After wave 5, big ABC. It's the kind of thing you'd expect to see after just a massive parabolic move. Something like this on a higher degree time frame, right? We have this big parabolic move, chop, chop, chop. I mean, I haven't even put this fractal over the price action. I'm sure there's at least some similarities. Let's just do that really quickly. I'm not claiming that you can just run a fractal here and predict what price is going to do. But something like this, right? We have the big parabolic, sharp pullbacks into the high. You know, this, I mean, this is funny because something like to this degree would just be a perfect retest of the previous all-time high. Obviously going to be a level to look at if we have a big parabolic move and a sell-off. But I quite like this idea, right, of coming down, taking this low. But let's not worry too much about it. So this is the high time frame thesis of getting long on some of these sharp local pullbacks. And now this is going to bring us to the long setups I'm interested in locally. If this is a 1-2, this is one possible scenario. There's also scenarios of coming down into this 58K low that I'll talk about. And I'm going to switch bullish. Well, I want to get the most out of these ideas. So if this is a 1-2, well, we're looking for some kind of correction into our 2, right? Wave 1's hypothetical right now. Let me turn off this. Well, we have a couple nice structures. What about big expanded flat here? We come down, we run into this 68K low. If we run into this as we tap this trend line, just a nice structural confluence here. And it comes in right around the New York Open today. So that's why I said yesterday, right? I said, I'm interested in this level as an intermediary long. I can put that in, I can show that in the Discord in a second. Because it's just such a simple idea. I mean, we come down, we run the highs, all-time highs. We come down with a quick move to the downside, right at the New York Open, right at the 618. We put in our A, B at the 123.7. We have that one all-time high fake out. We get a nice little flush. These ideas, by the way, have triggers and invalidation. So if we just break out, I'm not taking this short. If we just break this down, I'm not taking the long. I'm going to see if we come down to New York Open, we get a big flush. Should be a pretty reactive level. I think it's going to be worth putting on a little bit of risk there. And if price just rips through the all-time highs, then I'll just hold this long. But then we have a big 15% move to the downside to come and take these lows, which let me turn off all of this mess. So what I have written here is just explaining that. Let me go here. I just want to explain the concepts here. This is an ascending structure. This is a shallower ascending structure. I like looking for timing between parallel structures and key horizontal levels. I like looking for those as a nice timing confluence. When you have a 618 aligned with a trend line, aligned with a major market open like the New York Open, for me, that's a nice kind of confluence for a setup. But just pointing out, if we bounce here, then our 123.7 will be here, just running the all-time highs around 75,600, which also would give us our 1618 extension for our wave C back into the 618 retracement from this low, which aligns with our trend line in around the Friday New York Open. Okay, so we have this New York Open here. We have kind of a week of price action here, something like that. So let me go here. So this is how I'm planning out and structuring my trades. I'm not just saying, oh, I'm flipping to a bullish thesis here, so now I'm going to just get long randomly. Still going to look to structure my trades with invalidation and risk management. So here, let me go here to the Discord really quickly. This is just my updates a couple days ago. Just saying, looking for something like this, you know, move up, maybe wick the all-time highs, front run the all-time highs, put in our 1-2, trading at 64K. And here I have an A, B, C. This is another potential idea for the correction. We don't put in the expanded flat. We don't wick the all-time highs, but I'm going to explain why I like the idea of running the all-time highs, and it still works as a corrective idea. And what I pointed out is this is becomes a parallel structure now into our trending structure. Nice idea. And but I'm also interested in this intermediary long and just explaining this concept here of long, short, and then swing long off the 64K level. With a little bit of discretion here, depending on what happens on a breakout. But why would I maybe expect to see a run through the all-time high and then a big wick to the downside as a possibility, right? And this is me just explaining what I just explained here in the medium time frames channel. Well, let's go to these all-time high attempts on the 1 hour chart. It's not atypical to have a lot of volatility around all-time high breakouts. So this was our first test of the 2021 all-time high. We slightly front ran it here with a pretty big pullback, and this is what I was longing into, and I wasn't closing my longs here. I actually was adding to my longs on this big wick to the downside. We push up, and then we just have this first wick through our 2021 all-time highs, trapping massive liquidity. I mean, so many longs opening on that breakout, and everyone just flushed out. And then we grind back up. We make a new all-time high, so many longs, and just everything wicks back out. And you'll notice, why are there these big wicks to the downside every time we're testing a new all-time high? And then obviously a big rejection. Where do you think people are opening really leveraged longs, building up a lot of liquidity to the downside? Where do you think somebody is going to make the decision? They're going to say, this is it. This is the chance to retire my lineage, my children, my grandchildren. If I go 10x long here, there's no way this breakout doesn't just go straight to 100K. They get ran out, and after grinding and grinding and grinding for years, they're out of the game in one big wick down to 15K. We get this nice 1-2, and then we just rip, right? That's the type of liquidity idea I'd be looking for at an all-time high. That's why I like this, is this, any breakout attempt is potentially very trappy for the first move, right? If this happens, okay. If this happens, whoosh, this comes quickly, and that's might be a quick entry long setup there. But how quickly can this happen? So quickly. For example, I was live here. I forget the exact details. I was interested in shorting another failed breakout because I was on a live stream here and I shorted this failed breakout. This came in like, it was like insane longs, like insane volatility here, longs coming in, longs coming in. And I'm like, okay, like I might fade this. I don't know. I don't really want to. I want to see what happens. And then it was like 15 seconds and it just went straight down. And it's like, okay, I missed that trade. I mean, I probably could have traded that. I think I did a hindsight analysis recapping. I'm like, yeah, I probably could have taken a short there, but I didn't, and it's fine. And then there was long setups here. But anyways, we can see this. Why does this happen? Why is this big wick, new all-time high, big wick, takes that liquidity and straight down? So somebody will look at my idea here of just wicking through the all-time high and having a straight as crazy. Well, let's just take anything can happen. Anything can happen. I'm willing to accept a breakout can just occur, and it can be a massive breakout. But let's look at what the data suggests happens as a frequent outcome of our first test of all-time high. First new all-time high, straight down. Next all-time high, wick, straight down. It's a wick though, right? I'm not talking about straight down to 42K. I'm talking about what are some levels I'd like to long on a rejection. This one, we have a breakout, consolidation, wick, new all-time high, straight down. Another move up, new all-time high, straight down. I know this doesn't look like that crazy, but it's the same concept. New all-time high, straight down, right? That's we're just wicking the all-time highs here before a big rejection. Is it so crazy for me to be thinking of this idea of maybe even a little front run like we had before, put in a higher low here, wick the all-time high, straight down, run the liquidity into this nice technical level? I don't think so. Now, there's a big difference between being interested in this long and interested in this short. This short might not be that easy of a trade to execute. I was interested in a short here. Again, you could go back and watch the live stream, and I didn't take it. I didn't feel I had the trigger fast enough to catch the trade before the price came back down. And maybe that was just, maybe it was too much caution, but I don't really want to get slipped on a big breakout there. So if I get something clean, I'll look to trade it, but I'm going to really be careful about my risk, right? Because it's not, and obviously if I end up in that short and then price literally just nukes straight down through all these levels, then I guess I have a swing short from the highs and I don't close it because there's no strength at anything. That's a possibility, not what I think is likely to happen though. But yeah, so this is something that, it's kind of funny because when you post your thoughts on the chart on something like Bitcoin, a lot of people infer a lot of things about one, how you're positioned, your thesis, whatever. Now, or that you're getting wrecked or whatever it is, right? Because you have an idea for a swing short here, and you say, if we take this high and we don't form the lower high, then I'm just going to stop it out. I have some bullish ideas to get long if we do. But in reality, you're taking, like for example, I might, if I hadn't done this live stream, I've shared these ideas in the Discord. I might have ended up with short, long, take profit, short, and then I might say, I'm taking this long, and people say, LOL, you got bullish at the top and price just breaks down. I'm winning in here, right? Because I'm trading these on different time frames. So you're gonna win some, you're gonna lose some. Talking about winning some, I just want to mention this. This is Wingstop, and I did a post about shorting this on Wingstop at the Pico top here. And it's funny, I came across a thread on Wingstop, and it's just been in this like massive, crazy uptrend, right? Like, it's just trading at a crazy evaluation. It's like a meme stock, right? At a certain point. And the thread was somebody talking about like the fundamental case for Wingstop. And the way I interpret such a thread is people are just trying to explain why is price just going up and up and up and up and up? And like everyone must know something that no one else knows because it makes no sense. It makes the valuation of this company makes zero sense. And the thread had a comment in it, and somebody said, wouldn't this just be a good short? And they explained, it's an unshortable stock. It's an unshortable stock. And here's the fundamental case for it. It's basically something like, think about it. McDonald's has 40,000 stores and Wingstop only has 1,000 stores, whatever, right? There's more to it. But by the end of that little back and forth in the comments, that person said, wow, I can see the vision for Wingstop. I actually think this is a great investment right here. He went from just looking with a few minutes of conversation being like, wouldn't this be a good short, to, whoa, this is a great investment. And so I'm like, all right, well, this looks like the kind of thing that I'm looking to short. I mean, if trading meme coins has prepared you for anything, trading shit coins, shorting the tops of shit coins. And the idea was relatively simple. We're running up in this, I love parallel structures, especially for all-time highs. This really clean parallel structure into a double top, nice tight invalidation short. So I shared that idea. Someone in the Discord would just shared this. Lucky Chart Ape threw Wingstop out there. If you're ever in Chicago, leave your women and children at home. I got you. Nothing but steak and lobster on top shelf. All January put strikes up 300% plus. And he printed $50,000 day on that. He's an experienced trader, by the way. He can't. I said, big congrats on the big win. Don't blow it all on the next setup. But he explained he's an experienced options trader. So just putting that out there. But anyways, there are so many different setups on the charts. And one way to kind of take some of the pressure off of, first off, let me put it this way. If you're not a trader, you don't know how to manage your risk, you don't know how to execute trades, these types of setups just aren't for you. For me, the idea of a long here is really, the central idea here is I'm willing to long with defined risk, and I want to cut my long if this is breaking down. I'll just cut it. I'm not investing. I'm not taking a 5x leverage long and just letting myself get liquidated. It's a defined setup, right? Same thing with Wingstop. This is a nice structural idea for a short. If we break out there, I'm just going to close it. I took a short on Google yesterday. We have this big impulse up into the 786 on Google. I have some higher time frame ideas. And so I shared that. I'm trading lots of different things. I mean, I have many positions open across crypto and stock market. I'm in some swing trades on like Doge and some other alts, and we'll talk about some of those. So just something that shouldn't be a surprise to everybody is that if you want to get good at something, practice, right? Just showing talking about a few different stock trades in here. I have an interesting idea. I'm interested in this idea on Nike, but I just said I'm trying this short at the 786 on Google. If it didn't work, it doesn't work, and whatever. But something that shouldn't be a surprise to anyone is that if you want to get good at something, practice. If you want to get good at tennis, play, practice. If you want to get good at fencing, practice. Maybe hire a coach, maybe learn some techniques, maybe start implementing some of those ideas. I made a comment the other day because, for whatever reason, what's his name? Who's the guy that ran the Magellan Fund? He's one of the most famous investors. Why is his name escaping me? It doesn't matter. But he made a comment. He said, and this was about investing in stocks. He said, this was back in like the 90s. He said, for some reason, people will spend so much effort figuring out which toaster they're going to buy, which blender they're going to buy, what chair they're going to buy. They'll do all this research. They'll read all the reviews. They'll do all this. But when it comes to buying a stock, they'll just buy it for no reason. I mean, they won't even put any due diligence into how they're investing their money. And there's something kind of similar that goes on with trading, which is, for whatever reason, people will risk insane amounts of money relative to their net worth trading with zero experience. And, I see it in some of the criticism of the fact that I have something like this Discord that, you have to pay for. And to people, the very idea of paying for any kind of educational content, whatever, is it's repugnant in trading to them. But my tennis coach is $100 an hour, right? This is a hobby. maybe you get a less experienced tennis coach and they're $50 an hour, whatever it is. If you want to get good at tennis, if you're interested in playing tennis, of course, you hire a tennis coach and you play a lot of tennis. What do I do to get good at tennis? I learn things from my coach, and then I go play and practice with people, play games, do all that sort of thing. Paper trading is a great way to practice trading. If you want to get good at trading, do you think you're going to be better or worse, more experienced or less experienced? If you're starting from scratch right now, you learn some concepts to apply, and then you practice them paper trading. I'm just going to give a scenario for the next 1 year. For the next 1 year, you make a goal and you say, I'm going to take 2 paper trades a day, structure these trades, learn these concepts, see what works, see what doesn't. At the end of 1 year, I'm going to see what I've learned. Are you going to be better or worse? Probably better. How much better? That's going to vary depending on how quickly you learn and what you're learning, but it shouldn't be a surprise that if you want to get good at something, you just practice it, right? You get exposure to trading. The best way to do that is paper trading, in my view. That's trading with fake money. There's no point in trading concepts that you have no personal track record, history on, your ability to execute those trades, your understanding of the EV nature of those trades, until you have your own data. So this is, I guess I'm going to go on a little tangent here before I go into some alts. This would be my advice to any new trader. Don't risk anything in the market until you've built up some data. So here's a perfectly safe way, no matter your net worth, to start approaching trading with a pretty minimal risk of blowing up. You should understand that the majority of traders, people who attempt to trade, right, in their first year lose money. Most people lose everything. Everything. Are you doing anything different than most people? If not, you're probably just going to fall somewhere in the average result, right? There's very few traders. Now, a lot of people will say the best place to learn is the market. Yeah, but you do not need to risk everything to learn anything, right? And there's concepts you can learn without risking anything. There's concepts that you can learn and that you're only going to learn with putting a little bit of risk in the market. I would recommend, if you're a brand new trader, start at paper trading. You do not need to learn the basic concepts of maybe some of the basic concepts around something like leverage, which is a more advanced concept. If you're not at a more advanced level, you shouldn't even be using leverage. How to size your trades for appropriate risk management. A lot of people don't understand, how can I have a 1% loss with the stop 7% away, right? That sounds like a complicated or simple subject to most of you, but for some people, they don't understand that. They do not need to learn that lesson with all of their money at risk. That's a basic concept, how to structure trades, how to size trades, that you need to learn with no money. There's no point in having money. And you say like, wait, what? Why did I just lose 50% of my account? I'm a new trader. I thought I was risking 1%. I thought I was risking 2%. Or why did I just take 5 trades? I was only risking 10% per trade, and now they all lost. I thought I had a 50% win rate, right? They don't understand some of these concepts. So learn some of that with paper trading. You build up a repertoire of paper trades, and you really understand these concepts you're trading, and you say, okay, I have my last 30 trades here. I've been putting on 2 trades a day. I've been the last 50 trades. I'm going to put a little bit of risk in the market. I'm going to, let's just say that your end goal is to trade your $10,000 of capital that you have set aside. Say, I'm going to put $20. I'm going to put $20, and now I'm just going to see if I can duplicate this, or $50, whatever it is. And you start doing it with live funds, and all of a sudden, you don't know why, but you start thinking, oh God, your execution falls apart. You start thinking, oh, I really think this next trade is going to work. I'm just going to all in. I'm going to all in 10x. And everything falls apart once you put money on the line. Well, hey, good, you did it with $50. Maybe take a step backwards. But what I would say is maybe you execute your next series of trades with $50 and you have some decent performance. Then maybe you step it up a little bit. Say, you know what? I've ran my $50 up into $89. I'm gonna go to a $200 account and see if I can keep my trading execution intact, and trade with that. If you do well, bump it up. If you do poorly, go back down. And you can end up, this would be the ideal scenario. By the time you're trading your full account size, you have so much experience. You have your own personal track record. You don't need anyone to tell you what to do, how to trade. You know, you have the experience. You're like, yeah, I've learned this lesson. I know it works for me. And you're just, this is how I have to execute trades to be consistently profitable. And by the time you've reached your $10,000 account, your progress looks like this. You traded profitably, paper trading. You traded profitably with a small amount of money. You traded profitably with slightly more money. And your entire track record to get to your $10,000 goal size of trading all your capital, maybe it's $100,000, $500,000, is a profitable trader. The only way you get there is consistently profitable trader with a track record that understands their drawdown risk and all these things. You literally can't, unless you're just the luckiest SOB in the world who had no idea what they were doing and somehow just ran up every account up until, with no risk management, no whatever, no large sample of trades, getting you wrecked doing the wrong thing. You're going to get there as a experienced, profitable trader. I see no reason for people to be risking insane amounts of money with no experience, right? It just makes zero sense. It makes zero sense. Yeah, but anyways, this is my thoughts on Bitcoin, and we'll see. Maybe we just run this all-time high now. I mean, it's kind of hard in a way to imagine we don't, but I do like the front run idea. But keeping a big eye on this level into the New York Open in several hours. All right, let me go to some of the alts I'm looking at. I'm being asked about Doge. So Doge is one of those coins that I have swing longs on from down lower. And, you know, at the time people were saying, I got unfollowed for posting this swing long because somebody said, how do you have a bearish thesis on Bitcoin? By the way, I mean, obviously Bitcoin was much lower and I wasn't locally bearish on Bitcoin at the time, and a bullish thesis on Doge unfollowed. Well, this might be a little bit of a longer live stream than I anticipated. I'm not saying I'm bearish on Bitcoin. I'm saying I'm going to take a short here on Bitcoin, targeting here, and I'm going to cut my short if this level breaks. That's not a bearish thesis. That's a trade. I'm not bearish on Bitcoin. I have a beautifully structured long setup with some higher time frame ideas down here on Doge. Why would I sit here and say to myself, I refuse to take this long because I think Bitcoin is only going to go up. Let me go here. And this is, I'm going to apply this to the whiff short as well. You know, so let's say Bitcoin's down here, Doge is down there. I say, you know, yeah, this is an interesting setup on Doge, but I think we might rally a bit. But I think Bitcoin's only going to go up 30% and then reject back to 42K. I'll long Doge when that happens. No, I'm just taking structured setups. I had a long setup from here on Bitcoin. People say, but the post I posted at this time right here was saying, I'm looking for something like this. I want to long into this and a sell-off. So I want to long into this. I want to short this. I got stopped out my short. But when I posted this long setup on Doge, in the Discord I said, my idea here is I'm not going to overlook taking any long trades because I'm not a psychic. I'm not trying to predict everything the market will do. I'm just trying to structure technical trades. Let's just say if Bitcoin does break out to the upside all-time highs, I'm placing the bet here that essentially Doge is going to be a nice long to have in that case, right? And several other alts at the time. And so that's kind of my hedge too against the thesis. Like I want to get long off support on Doge, and I want to trade because I think Doge also is likely to outperform Bitcoin. So if I take a short that gets stopped out on Doge, Bitcoin much higher, that's fine. It doesn't mean I don't want to long the bullish case here for Doge. And I even said that I think Doge is one of those coins that could actually perform well even if Bitcoin's going lower. But anyways, so let's talk a little bit about the Doge idea here. I will mention that I had some ideas for longing into this, and I did long, like I took a long on this, an ad, I got stopped. I took a long, I'm going to show it here shortly, into this move, into the 618. I took profits on it and got stopped on the rest of break even. And so I'm going to show that in the Discord here. So let me go here, alt charts. All right, going to Doge. So, So what I was showing here is that I want to take longs on Doge. This is a while ago here on the daily chart. And so I'm going to explain some of the longs I'm still interested in on Doge. I want to take longs for the next leg up as a sweep of the daily candle lows here. And so I took one winner, one loss, and I didn't get the ad for the next leg up to hold for the whole swing. So I was looking for this long setup, and as price came down to the long setup here, said Doge about to test these daily lows. We took the lows, got a nice reaction, and price actually ran up kind of nicely for a little bit here. The trade ran into 2-3R, but I just said, listen, I'm just going to leave the risk in this trade. Like here we have this nice sweep, nice retest. I want to hold for the next leg up. I know I could get stopped out of this trade. That's fine. I cut Doge at entry here. And I mean, I don't even have to tell you this. I cut Doge at entry here because this looked kind of weak. And I said, I don't think it's unreasonable to stay in the trade, but I have an entry right at the daily candle low. Prefer to just reassess. And I might literally end up back in the trade. So I did end up just really putting the risk in and getting stopped out of that. And then I longed this retest here. And this printed really nicely. And just full disclosure here, I took profits off this rally, which ended up being a good idea because we ended up just rejecting and taking the low. And then I didn't add back on that next sweep. So just saying that locally for that ad, I had the idea of I want to add into this because I'm looking for another big move to the upside on Doge. And so I was looking, so now I'm looking for this, but this was here, right? I was looking for this impulse up into this level, which is a very technical level. It's important. It's the 786 right up around here, sweeping these daily highs on the log scale. On non-log, it's the golden pocket. I'm going to have to turn off some folders here. I should have probably labeled them. I need to organize this Doge chart much better. There's the non-log, right? So anyways, we come up here, important resistance. I'm not going to long up into this high here, but let me talk about some of the long setups I would be interested in. Let's just go back so I don't have to find all these folders. There's two setups. One being we sweep this high, we come back down and we retest this ascending structure into the GP. This is a log scale setup. You will find I do a lot of updates in the Discord. All right, so this was the idea back then, right? Before we took this high, just this idea of running up into these highs, looking for something like this, and then the structural idea here, there's two ideas. One is the deep pullback, and if you go back to this is the chart I posted at the time when I took the Doge long, right? We have this idea of just holding this descending structure. We have the retest, running up, breaking out this descending structure. Maybe we bounce around, retest, impulse up, retest, running, forming a little bit of consolidation around this lower high, impulsing up into the 17 cents region, and maybe coming and taking these lows. Now, this was a rough idea at the time, but this is just it compared to the current chart, right? We run up, we retest this trend line, break out, retest this trend line. We have this little consolidation, impulse, and one idea is coming down and running all these lows back into 12 cents. The other idea is what I just shared, which is into this ascending structure, and we have continuation. So there's two ideas I'm looking for here. Two ideas I think are strong, and I'm willing to put risk on, and both of them I'm okay to take a stop on one, and I'm okay to take a stop on both. They're reasonable ideas to me to add to longs. One is to come down and take this low, or sorry, to retest this trend line. Could align with Bitcoin doing the same thing. And targeting up into these highs. The ultimate targets here, I'll go over them, are all-time highs. But there's big targets like 43 cents, and there's actually a lot of confluence for hitting that by the end of the year, which may or may not happen. Timing confluence. But the other idea here is, let's get off log to regular scale, is coming down into the lows that we put in here, right? So we have this rejection, A, B, C, correction. Two ideas I'm willing to trade around, one on non-log and one on log. I could talk a little bit about the Elliot wave kind of targets here. That's the long I'm in from lower. It's a little messy. What I like to do is I like to pull everything and then look at what this all looks like. I know it gets a little messy, and usually I'll clean up the charts a little bit before I'm sharing the ideas. But some big targets for me, taking this high around 25 cents for our potential wave 3. We have wave 1, 1, 2, 3, 1, 2, 3, hypothetical 4, 5. We get maybe a big retracement off of this 26K high, which aligns with the 618 retracement. It's big technical level. Take this high, run through it, have our wave 4. Wave 4 comes back down to kind of retest this idea, and a big impulse up into some ascending structure here. And this aligns at around Christmas. We know December, it can be a big idea for major highs. Discount, I would be looking probably for a shallower pullback, but major target around 42 cents into this ascending structure, into the 786, which is also the 168 extension. There's all these things, which is also the, I'm looking at this timing confluence, the 1618 fib time confluence. I like parallel structures. Here, I like this idea of the big impulse parabolic move up into 42 cents. These longs have really nice risk reward ratio, targeting 200% away. I'm willing to keep adding to my Doge long, but still looking for nice clean setups. I don't want to maybe long right into this. Of course, there's lower time frame ideas to chase into this. It's just, actively trading into that kind of big breakout trending move. Just something you have to have experience and do. It's hard to kind of plan ahead for that. I have an idea for CRV, taking this at 18 cents, still waiting for that. I want to talk about Matic, a big target I was looking for. Just a simple idea, taking this low. It's now pull, taking this low, reclaiming it. I'm willing to put on a little bit of long risk there. But I want to talk about WIF really quickly. All right. So I have a short on WIF, and the whole idea was to come up, take these highs. I had the idea from way down here months and months and months ago. I executed that trade after that 100% rally, and the trigger was just wicking through these highs into this level. I took this trade, and there were some ideas of adding to the trade. Now, people are asking me, if I'm bullish on Bitcoin now, if my primary thesis is bullish, would I just close all my WIF shorts? Like, why not just close all my WIF shorts? Because if Bitcoin's going to break out through all-time highs, well, certainly WIF is. There's a couple ways to approach this. And the thing is, it's kind of like with my Doge idea and my Bitcoin idea. People saying, why are you swing long Doge, but you have a thesis of Bitcoin going to 42K unfollowed? Well, why double down? Why double down? I'm going to take longs on Bitcoin. And I'm also going to close all my shorts when I can just let this chart structure play out on its own. I mean, clearly WIF has been really weak against Bitcoin. If we, since this high was put in, let's go here. I'm going to just share a couple of thoughts here because it can be confusing to people, but I'm willing to have some shorts. If I'm completely wrong about getting long on Bitcoin, well, hey, maybe my WIF shorts keep printing. So this is the same time frame, WIF at the high and Bitcoin here, right? Bitcoin's been rallying up, almost straight up, WIF in a downtrend. Now, if Bitcoin goes straight up to all-time highs, is WIF going to go straight up to all-time highs, retest the century? It may. Who knows? Doesn't really matter to me. I don't know what Bitcoin's going to do. I'm taking structured trades. I'm not guessing what Bitcoin's going to do. I'm taking structured trade setups. If they don't work, then I have this WIF short. If they do work, then probably my WIF short's going to get stopped out and my Bitcoin long maybe is going to print. But something I'd point out here as well is I took this CHZ short and we went straight down 38%. If I want to compare it to the Bitcoin chart, which we will really quickly, and you'll see this over and over and over and over and over again on the charts if you pay attention. Well, CHZ has done this straight down, literally straight down. Just can't even make a higher high on like almost any time frame. Bitcoin had an initial rejection, a little bit of a pullback, but Bitcoin's gone straight up, and CHZ's gone straight down. I hit my target on my CHZ short. Something that people like to do is they have like a technical system. I mean, my trade set up on CHZ was just coming and retesting, taking all these daily highs, retesting this, just a nice clean short SR flip back into these lows, into the GP. Very straightforward setup in a way. But so people will have, say, a setup like this, but then they'll start adding in what they start thinking as, I'm going to guess what Bitcoin's going to do, and I don't really care about the structure of this chart anymore. I'm just going to guess. I think Bitcoin's going to go up, and I think because Bitcoin goes up, CHZ is going to go up. And so I'm just going to close my CHZ short, or I'm going to get long on CHZ. And I don't think many people have that concept backtested in their trades. So for me personally, I like to just trade the chart structures independently. I'm not trying to guess what everything else is going to do because of what I'm guessing Bitcoin's going to do. I'm going to structure trades on the chart and just let them play out. Same thing when I had this FTM bearish idea here and suggesting this big major retracement. At the time, people were literally saying to me, if this is going to happen on FTM, Bitcoin would have to go back to its 15K lows. That's never going to happen. You're an idiot. Why? Why? FTM rallied 600%. There was big technical confluence for this idea, and lots of bearish ideas from there. I don't have to guess that Bitcoin that we're gonna have to go back to. Actually, this isn't even the Elliot wave count FTM folder. But when I was posting this up here, I don't have to guess what Bitcoin's gonna do. I can just structure this idea on FTM, right? We end up with this really nice ascending parallel structure here. Still some ideas of another move to the downside. So that's how I like to approach it. I'm not trying to guess what Bitcoin's going to do. I'll take some longs on Bitcoin on clear setups. Does not mean I'm just going to ignore the structure of every other chart. Somebody says, starting to not enjoy your analysis. It's long and boring. Too much jibber jabber. Unfortunately, that is sort of the nature of my trading and analysis. It's kind of boring. Risk management, setting up structured trades, taking them if I get triggered, stopping them out if they get invalidated. Typically trading, for me, I try to keep it pretty boring. Try to keep it well explained as well. How do I handle trading during high impact news events? The same way I handle trading any price action. I mean, during high impact news events, I mean, I'm always trading technically, and I'm using order flows of potential confluence. A lot of times during big news events, you're going to have, not always, but you're going to have pretty clean technical ideas play out. It's just going to play out with way more volume and way faster, right? So let's just say, like, for example, I mean, we're approaching the election, right? This could all play out very, very close to the election. You have this being like, think about this. Like, what are the catalysts? We can kind of play around with the timing a little bit here, that we could imagine, like a pullback, a big move, tons of longs opening here. There's going to be potentially fundamental news-driven catalysts around the election, trapping a shit ton of longs, and then price wiping them out. I mean, price is driven towards liquidity, right? And it moves based on liquidity. So for me, am I going to say, I'm not going to take personally into account the news event. I'm not going to try to interpret. I mean, you don't have to be a trader for very long to see that the fundamental narrative just shifts based on, like, for example, price is breaking out, Trump won, and then price rips back down. The market had already priced it in. That's why it went back down. It's like the narrative is, the goalposts are always going to be moved with, you have no, it's like this, right? I put in, let me go to the order flow really quickly. So like last night I was mentioning, whoa, there's like a shit ton of longs coming in here. First shorts are closing. Go to this candle. I actually want to go down to, well, I'll just tell you what was happening here. I could go to the 1 minute time frame, but I just happened to be sitting here. I'm like, whoa, 40 million shorts just closed. Then just all these longs, 179 million longs opening, just kind of a random. This looks like the type of thing you'd see during like a news event. The speculation in the Discord, people said, oh, maybe it's this MicroStrategy news that they're going to raise $42 billion of capital to invest in Bitcoin in the next 3 years. Maybe that's it, right? But so, does this make any sense to long on this 5 minute candle, $180 million in longs, and then just close them instantly because of that news event? And no matter what happens here, like if this just goes straight up, it'll be like, oh, it was because of the MicroStrategy thing. It's like, I would just trade the liquidity and technical ideas personally. But so like if $500 million of longs opens at all-time highs and Trump's won the election, whatever it is, and then price rejects back below the high, I'm not going to say, well, that's pretty bullish news, so I was going to short that, but now I'm not going to, or if we get an inverse, we get a big move down to the level I want to long, and some bearish news comes out, and I see all these shorts opening, and then I see price wick up, all the longs stopped out, all the shorts opening, price wick up, hold up the level, I'm going to just take the trade with risk management. I'm not going to try to do some analysis on how I think the market is going to progress over the next 1 hour, 5 hours, 2 days, 10 days, based on this news event, right? I mean, I've just seen it if you pay attention to the news, it's not the best way to execute trades. A news event doesn't give you great invalidation. It's just trading kind of volatility, I guess. But I actually wouldn't mind hearing from a couple people. Like, at the end of the day, I'm just going to talk about what I'm going to talk about. What I think's important, what I think's maybe interesting. But do you find these like boring and rambly? I mean, I definitely am rambling a little bit, but kind of hard not to ramble a little bit if you're going to cover a bunch of stuff. Can you? What was the thing I said? Oh, Caspa. I said I was going to look at. Really simple idea on Caspa. Let me just find the chart here. It's like so simple. Just take all these lows into the GP of the move, into this ascending channel. Such easy invalidation. You break all that structure down, you cut the trade, you hold it up, you have a nice kind of swing long idea into this really grindy downtrend. I have an alert set there. I haven't shared that in the Discord yet. I will. I have a couple ideas that I'm kind of interested in that I haven't shared yet, but Obviously, something like these highs has to be considered seriously for a take profit. But I'm interested in that long, for sure. Just such easy invalidation. As far as how someone's asking how to chart on the log scale versus regular scale, it's all the same. One's on log, one's for parabolic moves. I mean, a certain chart just not going to make sense of if you're on non-log scale. Sometimes you find log scale confluence with non-log. Like there's some here. I'll give an example here. Where's Nike? I should learn my ABCs. All right, so this is, let me go 7-day. There's this big log scale channel idea here. Coming down, retesting these lows. All right, so this is gonna be a non-log and a log idea together. This is the log variation, this log channel. And then I'm noting that we have some non-log descending channel ideas all aligning in here. Right now we'd have to run through this descending trend line, but it aligns with the timing aligns with this non-log ascending trend line into this horizontal support. Just looking for signs of strength from here. Can align some linear log ideas. Somebody says, somebody asking, yo, Lucky, what do you say to my stupid brother who sizes up big and just relies on conviction? Well, here's the thing, is if your trade works, you're always going to be happy that you sized up big and you had conviction. If you believe that the market is probabilistic and you never know what's going to happen, I mean, you can still do that and just accept the risk, understand and accept the risk. But if you understand like the law of large numbers, for example, let's just say you have a 50, I've done so many videos on this. I'm not even going to go into this concept too much. I mean, you'll find them on my YouTube, you'll find them in the Discord, you'll find them on Twitter. It's a mathematical certainty. If you put on enough trades, you're going to run into big loss streaks. And if you're putting on so much risk that you can't even afford to lose one trade, well, you'll be the first trader in history to never lose a single trade, right? Like there's people who are pretty inexperienced traders who are trading in such a way that they're expecting to have the greatest performance of any living trader in the last 100 years. They, not to be an exception, like you take some, I used the example of a trader, there's a few traders like this that have ran up like $9,000 into several $100 million over like 10 years. That's a pretty good run, right? To trade for 10 years and run $9,000 up into $150 million. Those traders, some of them have 30-40% win rates, trading around 4 or 5R, some of them trading around 3R. But if you're trading the way your brother's trading, they're going to take a system that is legendary, or a result that is legendary, and a system that is pretty straightforward to print unlimited money, and they're going to lose all their money trading it. If you're trading a 30% win rate system, 40% win rate system, 5R, and you're putting everything into all your trades with all conviction, no risk management, you're just going to lose all your money, or you're going to turn $10,000 into $180 million over 10 years. It's up to you. And the point is, I don't know your brother's trading system. I don't know. It doesn't really matter what his result is, if it's mathematically certain to send him straight to zero, right? His short-term result. Anyone, I mean, I just This trade, if it works and I 100x my net worth into this level and price goes straight up, I'm just going to and we go to 100K, I'm going to outperform the top performing hedge fund in the world, right? And you'd say, well, I had a lot of conviction in that level. What if I keep doing that? What if I do it again? Well, print again, and then I do it and I lose once and I lose. I'm going to lose, right? You could say, I'm only going to do it once. Oh, yeah, good luck. Good luck. Do it once, good luck. Hopefully you start using risk management after that. But it's like, there's certain systems that so I put it this way. There's a recent story that was floating around about a Canadian trader who options trading Tesla, ran $80,000 up to $400 million and then lost everything. So he's a carpenter, went from $80,000 to $400 million in a year and a half, and then went straight to zero. Obviously, you have to be taking on pretty extreme risk, right, to run 80,000. And you could say this guy's a fucking genius. He ran $80,000 up to $400 million in a year and a half. But I want to ask you something. Why isn't every hedge fund money manager on the planet calling this guy to hire him and ask for his advice? Why does no one give a fuck? Because there are millions of people making millions of outrageously risky bets. 99.99% of them are just losing everything. And yeah, one person's going to win. It's like the lottery, right? And you're going to hear about the guy that wins, but his system sends him to zero. So no one cares. It's like the person who's like, look, I put 100x leverage into this shit coin and it went straight up and I turned my $1,000 into $1 million. Yeah. And for every person, for you, there's a million people that just lost it. It's like, you're not some great trader. And just think of it like this. There's hundreds of thousands, millions of traders putting on trades every day, taking extreme risk. You're going to hear the story about the guy who did this and made a shit ton of money off one trade. And you're going to say, oh, I want to do that. But think of if all those traders were one person. You basically just have a million people losing 99.9% of those trades every day. And then you're going to win. You take a million trades and eventually you win one trade and make back 5% of the money you lost on some big winner because you have to pay for a million all-in losses, right? If you just condense a million traders into one trader, and you talk about the one guy that won, you talk about the one trade that won for the million that didn't. It's not a very good system. But as long as he makes more than the million trades he lost, you could actually trade that system, but you have to do it with really, really, really small size so you can, if you're the casino, you can handle the million trade loss streak. We know it's not a common result to turn $80,000 into $400 million in a year and a half. We know that's a pretty unique story, right? Now, the question is it a lucky result? Or is this a systematic system where this guy he can do that all day long. He can turn 80,000 into 400 million. It's not luck, right? It's not just the random outlier because eventually, like you could say this, if you have a 50-50 coin toss and you're betting all in, even if you have good risk reward ratios on your trade, so you get paid 10 to 1 if you land heads and eventually you flip the coin enough times, you're going to run into a 5 trade loss streak, right? Yeah, it's not very likely on just 5 flips, but if you flip the coin 100 times, that's 100 trades, or 1,000 times, it's almost 100% guaranteed you're going to flip tails 5 times in a row and lose 5 trades in a row, even at a 50-50, because that's the law of large numbers. If you do that, it's probably likely you're going to have coin flip 10 times in a row on one side, flip it 1,000. It is quite likely, actually. So if you have 1,000 traders, well, somebody's going to be options trading, and they're just going to land on 15 heads in a row. Win 15 all-in bets in a row, and they're going to turn $80,000 into $400 million because there was hundreds of thousands of people doing that, hundreds of thousands of coin flips, and somebody ran it. But as traders, we can't really rely on that type of conviction, as it were. I get asked similar questions, but I'm going to go too into this. Somebody's saying, how many tickers on the trading list is manageable without getting overwhelmed? Well, obviously that's going to be trader dependent, right? Like my capacity for trades and to keep things organized, even just in my head, let alone on the charts, is going to be different than somebody else's. My capacity to trade multiple time frames, all that different stuff, I would say I have a very high capacity. I have very high capacity. Whereas somebody else might have trouble keeping one idea in their head. But I don't actually have a problem keeping... I can talk about my current primary thesis and what I'm going to do in this scenario, but I don't actually have that much of a problem keeping 7 or 8 scenarios in my head and even in on my charts, and just say I'm gonna go to those scenarios when these scenarios become invalidated. But what's the point in talking about every possible scenario, right? Until there's unlimited scenarios. So I'm going to talk about what I think is the most relevant scenario until it's invalidated or it has played out. So I would say, it's sort of like your question, how many tickers on the trading list is manageable without getting overwhelmed? That's something you got to figure out for yourself, right? Like I can't tell someone you can manage 20 or you can only manage 5 or you can manage 1 that's just something that you figure out for you. It's very similar to somebody saying they'll say, how much money should I risk per trade when I'm scalping? I don't know. Have you ever scalped before? No. Well, then 0. Right? It's like, do you have any data? Yeah, I've taken 100 scalps and this is my win rate and this is my average win and blah, blah. It's like, okay, well, you can figure out how much money you should be risking. There's not a universal answer, right? It depends what your trading system is, what your expected results are. You should be basing a lot of those types of decisions off your own trading history and data. I'm not going to even answer that question. There's so many reasons, and I don't even think it's really true. Hisba says, very important question. I see you use GP sometimes in 786, 886, others, e.g. on Nike. I usually find, given that harmonics terminate 786 a lot, using the 786, 886 is better. So why GP preference? I don't think there's a better or worse, but 786 is really can be a really strong level in different contexts. So can the 618. There's really no way to do that in a short answer. So I'll just say this. Someone says, can you go through in short how to make a proper trading system? I mean, sometimes, I guess it kind of goes back to the guy saying, like, I don't like your live streams. They're long and boring. There's no short answer. Like I'll get a DM and somebody they'll DM me something like this. Hey, I'm not really a trader. I have a lot of capital in this trade or whatever, but this trade's going against me. I don't really have the time to learn how to trade and use risk management. What should I just put my money in for the best chance of just making money and without losing it all? It's like, I don't have the answer. There's no quick answer. It's like, good luck. If I knew how to just trade and not manage my risk and just, I'd buy this coin and put all your money in that. That's the best chance. But I would say, I would actually only put this much in, so I'm only risking this much, and I would sell it at a loss here if this level breaks. And when I would add that in, right? Like, you have to. There's no, why do people are looking for a shortcut? I understand it, but like what I'm doing it's for traders. It's not for people who don't want to think about what they're doing, don't want to take responsibility for what they're doing. They don't want invalidation. They don't want to use risk management. They want to go all in. They want a trade that will work. It's like, okay, I mean, I have no idea how to do that, right? Yeah, so I would just say that, yeah, the short answer for how to build a trading system is to understand. So, like, people take some of, I think, take some of this stuff for granted. If you go like this, I just want you to go. I can give my opinions on the market, which my opinions is that basically everything is the same. Every chart is the same. There's no difference between Bitcoin. Like, some people take the approach that every asset's completely unique. There's no rhyme or reason. Like, a fundamental investor might just say, like, it's a good company, it's a bad company, whatever. There's a fundamental reason for buying this commodity or that, and there's just nothing. There's nothing that Bitcoin has to do with gold or. But my perspective is that you turn off the ticker, you turn off the price, you're just gonna find the same shit on every chart, on every time frame for the last 100 years, right? And so the short answer is go back and look at everything, right? Find an edge, find something that can be applied. If you only want to trade one asset, then just go study that one asset, every single tick of price, until you come up with something that you think produces an edge. And maybe you can find a good reason for it, maybe you can't. Like, for example, people talk about moon cycles. People have different theories on, moon cycles, but somebody at some point went like this. They went like this and they went, holy shit. Now, a lot of people talk about it, but at some point somebody just said, this is insane. These moon cycles are insane. These are like these are great signals. And then they started maybe thinking about, how am I going to trade around these moon cycles with invalidation? Like, obviously, not this isn't always going to send price straight down into this. Sometimes it's going to happen. They invalidate it. They start structuring trades, the back test. They think, if they had traded every moon cycle a certain way, what would the expected result be? And they go back through all of this, they back test it all, and they say, okay, my system is this. When this, I do this. If this, I stop it out. If this, I hold till this. And they build a system around the moon cycles. All right? The system can't just be go all in with 10x leverage on every shift in moon's phases, because you're going to say, oh no, I would have lost everything there, I would have lost everything there. But you might start saying, maybe I could actually produce an edge off of moon cycles. And somebody could say, the market doesn't move on moon cycles, you idiot. The market moves because of RSI divergences, and everyone's going to have their own idea, right, of what and why price does anything. And some people will say, there's nothing, technicals as a whole are retarded or idiotic, and everything just moves independently to itself. But that's not my view. So my view is there's a lot of consistency in how assets move in terms of price action. And one of those ideas is Elliot waves. And you can get edges trading around those consistencies. So yeah, and then you go forward test it. Maybe you start paper trading the moon cycles and you get a sample size that you're comfortable with, So let's just say, like, for different people, you could say you could go wrong because you don't form the strategy, the trading system very well, and you just lose a bunch of money because you miscalculated. So even though you have like the basis of a system, you haven't actually formed your invalidation, your entries, anything very well. Maybe you have, and you find yourself that even though you're getting your signal from your system, you're doing the opposite thing, or you should be stopping out, but you think, I think it will just return. And then you find, I have trouble psychologically executing this system. I know exactly what I'm supposed to be doing, but I'm not doing it. Or maybe you just do exactly what you're supposed to do and you start making money, right? But what you should have when you're back testing all of this is you should have an expected result. You should say that, okay, I know that if I take 40 trades based off of this system that I've just created off of moon cycles, my result should be something like this. This many wins, this many losses, with expected value of this. So if my max drawdown should be this, my max, I should win about this many trades, lose about this many trades. This should be the average risk reward of my trades. And then you plan how you're going to size your trades. You're going to say, okay, well, then I'm going to risk 1% per trade. I'm going to take the next 20 trades, 40 trades, and see what, if this keeps working. If it keeps working, I'll keep doing it. If it doesn't work, then maybe I have to, if I have a huge outlier loss streak here, and I look back and I say, I did exactly what my system said I should do, and I lost money over a big enough sample size, I need to reevaluate this system. Maybe you look back and you say, oh yeah, I didn't even do anything close to what I was supposed to do. Like I look back at my notes, I look back at how I'm supposed to trade these moon cycles, and yeah, I didn't do, I was shorting when I should have been longing, I was holding when I should have been cutting, I was closing before I should have been closing with partial profits, or I wasn't closing when I should have been closing. And it's like, okay, I need to do some work on my execution, right? So that's how that's the short way to build a trading system. You come up with a thesis, and then you back test it and you forward test it. And at any point you could just say that, well, just because moon cycles have worked in the past doesn't mean they're going to work in the future. I'm going to trade them until they work or stop working. But I need at least, I know that even in the context of all of this, I'm going to run into, let's say, an 8 trade loss streak at maximum. That's what it's going to look like. So I need to at least get through one of those, right? And I'm not comfortable losing all my money if I get an 8 trade loss streak. So I'm going to risk, 0.25% per trade or 0.1% while I'm forward testing this, whatever it is, right? Or I'm comfortable with an 8% drawdown, so I'm going to risk 1% per trade. I hope that makes sense. But what people take for granted is that there's people that study the market. They study the charts and they come up with ideas, right? And like you have to understand that a casino prints unlimited money with a 51.49% edge on a roulette wheel. And if you don't understand the idea of the trade, if I say to you, oh, let's just say you don't understand the roulette wheel. You don't understand it. Your mind can't comprehend it. And somebody who's really rich, like a casino owner, you say, how do you make all your money? How do you make all your money, man? How do you make hundreds of millions of dollars? And they say, basically what I do is I take the other side of the bet, when this magic wheel that spins around, somebody bets money and I say, okay, I'll take that bet. And I give them double their money if they win, and they give me their money if they lose. And they say, oh my God, that's genius. What are you gonna do it on this next one? They're like, someone bets $5,000 on black. They say, yeah, I'm gonna take the other side of that bet. And like, I'm gonna make unlimited money. I have $5,000 in my savings account. I have all my money. I'm gonna take that bet. I'm gonna become rich like you. Oh my God, it lost, you fucking idiot. I just lost all my money. That's how you made all your money? Are you a moron? You just cost me everything. They're like, well, no, I have a 51% edge over 49%. I'm just going to do that 10,000 times. They say, why would you do that? Right? That's what trading is. So it's just important for you to understand the concept that these ideas, right? You can't really make money trading. You can't make money as a casino owner is going to make on understanding the edge. Now, there's other edges. There's bigger edges. It's hard to get much smaller than a 1R 51.49, but that's about the tightest edge you can get. But if you don't understand the ideas you're trading, then even if they're a profitable trading system, you're not going to trade them profitably, right? And so in a way, a trading system or the market or an edge in the market is like that roulette wheel that you don't but just imagine you don't understand it. And so if you don't understand how the edge makes money over a large series of small bets for the casino owner, that's how they make hundreds of millions of dollars, then misallocating the idea that they make money by just taking the other side of the bet of the people that bet on the roulette wheel doesn't work very well. If you bet your life savings, you bet 5,000 and say it wins, you make 10,000, and then you think, wow, this is a magic way to make money. I made 10,000, I'm going to put my 10,000 against the next guy. And you win another one. You say, holy shit, I made 20,000. This is magic. And then you bet it all in the next one and you lose everything. So different systems have different edges. So you have to understand the edge of your system, the expected result. and I've pointed this out as well. There are systems that make sense to trade that literally have a 99% loss rate, but you bet really small and you make a shit ton of money when your trades work. And I highlighted recently a Forbes article about a hedge fund manager that basically just takes small bets on black swan events for 10 years straight, losing money every single day. But he's understands that the market misprices those events, and he just knows that eventually he's just going to print and make 4,500% on during a black swan event, and that's his system. He literally knows I'm going to lose a small amount every day for the next 7 years, and then when the event hits, I'm going to make back all my losses and more, and I need to size appropriately. But to the average person on Twitter, this guy would just look like a complete idiot, right? Like every day he would post, I'm short, black swan, I'm short, black swan. And they'd be like, you've never won a trade in 7 years. And they would be dumbstruck to find out he's trading an extremely profitable system because of how he sized it. So there's not one way to trade. It's about understanding the premise of your system, the premise of your trades. And it's not so simple, right? It's not so simple as to say there's only a short setup, there's only a long setup. So like the way I would put it is this: clearly that guy who's shorting for a black swan event every single day for 7 years, he had a profitable system, it played out profitably, and it required him to short the market a small amount every day, and that produced an edge. Clearly there were other edges in the market that involved taking long trades, right? There can be multiple edges in the market at once. You're not going to win every trade. That means for every trade you lose, somebody else probably won a trade, and that might be exploiting another edge. And sometimes you can even exploit different edges at once. You might have slightly different or vastly different ideas that you're trading on different time frames. You might have an idea for it's like something like hedging that I explained on WIF. I'm not going to go too much into it. I actually ended up sharing some of this on Twitter as well, but there's so many ways to exploit. You can go, I'll just scroll through my Twitter feed. There's so many ways to manage trades, exploit edges. So I'm just going to go. So one thing I'll say, this is just was me explaining all this hedging stuff on WIF, right? So I'm swing short, hedge long. I planned that out earlier on, taking this hedge long. This is TP1, taking these highs, that sort of thing. And then I did a whole thread as price progressed through this idea of short, hedge long, maybe TP, add to shorts, and this is and the pros and cons and whatever, and just working through the decision-making process on hedging. One thing that yeah, it doesn't really matter. I don't really care that much. Just a lot of comments are like, like selling paid courses, blah blah blah. I'm basically planning and presenting my analysis on the live market and explaining it every day. I mean, this is stuff. That's what I'm doing in the Discord. Yes, there is educational content that you can go through. That's like to understand some concepts, right? There's all these different things, but the vast majority of my time is spent breaking down and explaining trades. You can go through this stuff to understand the individual concepts more, but the vast majority of my time is spent, I didn't tab over to Discord. Yeah, educational content, but 99% of my time is spent planning out, structuring trades, and writing some exposition explaining them. That stuff, in a way, it's like having access to a trading journal, right? My trading journal. It's like people, there's this idea, like people say, like a real trader, real traders aren't sharing their ideas with people, talking about their trade ideas. They're sitting isolated from the world, just trading, just boom, boom, clicking buttons, long, short. I mean, yes, you can do that with some scalping ideas, but would you consider people who trade institutionally, people who trade at hedge funds, people who are discussing their trade thesis with their portfolio managers, real traders? Do you think that real traders don't talk about, explain their trades
to people, explain their thought process, update their execution. Do you think that it's just a bunch of gunslingers, and every once in a while their portfolio managers come and say, what the fuck have you been doing? None of your business, dude. I'm a trader, okay? I don't have to talk about my ideas. Well, what have you been doing? I've been isolated from the world just trading, man. Whether you're explaining the ideas to somebody else or yourself, you should be clearly planning your trades, right? This is my idea. This is where I'm going to get long. This is where I'm going to cut the trade. This is where and why I'll take profits, etc., etc. And then you should be documenting, I entered this trade. I'm entering this trade. This is my invalidation. Then you should be documenting the progression of the trade. I'm taking profits to yourself. Do it to yourself. What frustrates me is, like, one thing I really encourage in the Discord is people planning out their own trades. Share them in the Discord. That's a great place. There's places for you to share your trades. A lot of people do. Documenting them, keeping track of their data. But there are people who I've talked to throughout the years. They just don't do any of that ever. They don't do any of it. Like even people who are making an effort, they'll tell me, like, I want to become a full-time trader. Like, it's like, okay, I do this every fucking single day for 3 years, 4 years, 5 years. This is in the Discord publicly. You're seeing me do it every trade. This is one day on just Bitcoin, on stocks, on every idea, planned out, written, executed, invalidation, planned out, written. And you're telling me, that's the CHZ short, you're telling me that for the last 5 months, you haven't planned out and written out a single trade. You haven't done that one time. I'm explaining, this is why I'm looking to short CHZ here. I'm looking for this setup. This is the idea. Take these highs, reject into here. This is the CHZ short I showed earlier. We rejected straight down. Understanding, shorting a failed breakout here. Keep in mind, there's no structural resistance above here. If we break out, I want to short. I like this idea for a nice tight invalidation short, but I'm not just going to sit in this short, because this is the type of place you'd expect price to move straight through, right? Price comes up to the level, I say I'm taking the short. Got a small position on CHZ. There's a lot happening here. I was trying to update all the channels. Didn't quite tag SR, but just traded it. I accidentally shared the wrong chart because I had something else copy pasted from another trade setup. Then I just reposted. This is the setup I'm trading. It was Pico top. Had a nice local rejection there. CHZ, very clean. A bit of a busy New York open. Going to check it out for a bit. Happy trading, everyone. All right. So that's the process I just went through, right? And I go through every single trade. And it's just kind of frustrating for me, like when people explain that they don't do any of this. They just, I don't know. I'm trying to be an example. This is what it takes. Like people say, I don't know how to journal. Well, start by taking a chart, writing out your trading plan, writing out how you executed your trade, and then tracking the results trade by trade, looking for ways to improve, looking for errors. And yeah, I don't know. I don't know. It's kind of I'm going on a little bit of a rant here, but it is frustrating when you explain to people the things they need to be doing, and they say okay, and then they just don't do any of those things ever for months and months and months and months and months. All right, let me read through some comments after that rant. And just keep in mind, like, how many updates do I have in the Discord? Probably 60,000, 70,000 updates over the years. And most of these are like exposition level updates. multi paragraphs going over concepts, going over ideas, variations, all these different things, all my trading plans. And you know, a comment I've gotten from people that I think it really does sink in from long-term members is that they really appreciate the example of the consistency, right? Like you're here for years. It's just the consistency. Every day, it's the same thing, right? There's never a point where you're just saying, I don't have to plan out my trades. I know that my edge comes from me putting in the work, right? Like you're never such a good trader in my view. I mean, you can get to the point where you can just see the idea. Like you don't really have to pull the levels, but you should. But you can look at the chart and get the general idea for what you're going to be looking to trade. Then you mark out, define the trade. But there's never a point where you should start thinking, oh, I just make money because I'm just good at trading. I'm good at guessing which way the market's going to go. Like I'm just good at pressing the green button at the right time, the red button at the right time. The moment you just start thinking you're just good, you're just better than the market, and you know what's going to happen, you're just going to start losing money, right? You need to define your trades. You need to use risk management, and it's discipline and consistency, right? That's going to make you profitable over the long term. All right. Well, let's end this live stream soon. I'll read through some comments and then we'll end this. Maybe take a look at a couple more alts. This is my basic idea here. Run. Major idea is along here. I'll be honest. There's some there are some people that really just don't understand this. Like they'll never watch a live stream and they comment in my Twitter all the time. It's like, I'm not trying to guess what's going to happen. Like people will say, like, still waiting for a pullback, lol. It's like, yeah. I mean, I just went through all this at the start of the live stream. I'm just literally going to keep doing the same thing I always do. I'm not saying, oh my God, this short didn't work. I got to throw out everything and just start taking random trades. All right. Someone says, Lucky, can you please take a look at TIA? It's 4 a.m. here in my country and I need to sleep. That was me last night. Yeah. I'll pull it up for you just because you need to sleep and you probably already are gone. I think I haven't charted TIA in a while. Ooh, it looks like this might be a question based off of maybe being in a long and kind of worried about what's happening. Like, yo, please chart this, baby. So one thing that people do is I'm always skeptical. Like if anything crazy is happening on a chart, not that this is crazy, but TIA is going down, Bitcoin's going up. People say, can I get your opinion on this chart? I structure trades with invalidation. So my opinion isn't like ever going to be, oh yeah, I think we're definitely going to bounce here or we'll sweep this low or we're going to nuke here. I would look for structured trade setups, right? Like you get into a really big problem when you start trying to apply technical analysis to like get you out of a really deep underwater position or something like that. So like just to go over the concept, somebody will say they longed here, right? They longed TIA at $12 and they'll message me and be like, hey, I'm in this long here. how do I get out of this? Like, I'm super deep underwater. Is price going to go up or go down? Like, where can I get out of this trade? I'm trying to just get out at break even. It's like, but I can't close it now because I'm already down 50%. It's like, tough luck, bud. There's literally nothing you can do. Like, you can try to structure. You can say, well, all right, if this whole, I'm gonna risk a little bit more, 60%, and if this holds, then and maybe you have a liquidation, maybe you're leveraged and your liquidation's done here. If this holds, then I pray to God, just some kind of bounce. But it's like, you're just in a shitty situation, right? And technical analysis isn't going to get you out of it, because the technical analysis would be like, yeah, there's some support here and it might generate a bounce, and there might even be some long setups here if it does. But if it just breaks down and flips to resistance, well, maybe these lows are coming, right? And so it's sort of like, this is a range. This is a range. I don't want to infer too much, right, about where you're at. I'm just making it clear for anyone that could be in that situation. This is a range. This range might offer, it clearly has offered some long setups. You know, take these lows, form a lower high, take the lows again, take that high, a lower high, maybe we run the lows again, maybe we range back up to the highs, and this might be a long setup. This isn't a prediction of being bullish on TIA. This is just a structured trade. And if we lose this, well then, you know, I mean, price just go to zero. So that's just something to be clear about, is that, like, this isn't a prediction. This is a setup, right? It's like, oh, this is a range. It's like the CHZ short is not a prediction. It's to say, if we don't break out of this, I'm willing to short. If we break out of it, well, there's no structure up here, and I'm not going to be in a short while price does this. I don't have to predict anything. So if I'm looking at the TIA chart, I mean, it looks really shitty here, to be honest, but there's a range. I would probably say it's kind of, I mean, it either bounces or it doesn't. I wouldn't be surprised to see this break down a little bit on the fourth go and maybe do something like this if it's for bullish cases, but I would just look at this as a range. I mean, what else are you really going to say about this daily chart? If you lose the range, well, I don't know. There might be some older charts with more structure there. Great job. Charlie's saying he's been journaling for almost a year now. I appreciate that, YK. High time frame idea targeting 44 cents on FET still in play. I mean, I'm going to be honest, I haven't looked at the FET chart in a little while. I don't recall any alerts going off. I seem to recall getting clowned on again. Yeah, I think it's still in play. I posted this here, by the way, the 382. So major resistance here, 382, descending channel for FET. And I'm a little bit confused why all my alerts are gone here. But anyways, the comments on that again, like LOL, why not post a bullish idea? LOL, always looking for. I'm not always looking for anything. I'm just saying this is critical resistance. Can go search my Twitter for that FET post. Read the comments. Just kind of funny. Just funny. It's just the same shit every day. Same chart, same charts, same thing. If price breaks out here, then price is breaking out of some important resistance. But to LOL, why not share bullish charts here? It's like, well, people will ask things like, what's the bullish case? Do you have any bullish ideas? Well, let's just deal with this first, right? let's see, if price breaks out of here, yeah, there's some bullish ideas, but stop asking. I'm posting this for, I'm posting this for a reason. It's important. It's important. Not because price has to reject. It's important resistance. This is a really important structural idea here for continuation down into this low. That's why I'm talking about it. Like, I'm not saying every idea, clearly every idea I post doesn't work, right? But it's just kind of funny that, like, I'm not, like, I had some bearish ideas on NVIDIA. Initially, they played out, but here they have not. But the first bearish post I ever posted on NVIDIA was literally this exact Pico top for a 35% rejection. And all this structure played out perfectly until this, and I've been wrong from here. You could say that the idea didn't work. But, you know, the first bearish idea I ever posted, the first chart I ever posted on Wing was right here at the Pico top. And I'm just saying, like, people will say, do I ever have any bullish ideas? Yes. Here. There's a really big bullish swing position. I have some bullish ideas. I'm going to look for pullbacks on Doge at support. If I post this now, people will say, LOL, you ever have any bullish ideas? Yeah, I do, but I'm looking for a 20% move down on Doge, and I'm going to add to my longs. Those are my bullish ideas. Why do you want me to post the bullish ideas at the literal critical level of resistance? The bullish idea is that we break out, of course, but I would take rejection seriously. Yeah, someone says, yep, I was like winning 5 trades in a row thinking I'm a king, and then fuck losses. Yeah, of course. I mean, the problem is if you don't understand these types of events are just going to happen, you're going to win. I've won. There was a streak in the Discord where I won. I think it was something like 35 trades in a row, like big moves, 30% moves on altcoins. And I was on some insane win streak. I don't remember the exact numbers offhand, but I actually know that for that, this is going to sound weird to everybody, but for how I was trading then, my win rate would have been a lot higher because, this kind of has developed over the years, talking to some members, where it's sort of like, basically the idea is they don't want me to only share the high win rate ideas that I'm trading, because they're like, you know, we're not idiots. We understand there's edges to be produced without having a super, super high win rate. Like, they would be interested in learning about ideas that have, they might be 50-50 trades, but they pay 8-1, 9-1, 10-1, right? And so I think it's overall been a positive impact, switching from only posting what I consider really high win rate, both trade setups and trade management. And so, but anyways, back then there were some pretty high expectancy win rates. If I take enough trades, I'm going to run into some massive win streaks, and I'll run into some loss streaks as well. But yeah, that's going to happen. Now, through that whole process, every trade, I mean, at some point, I think my updates were like, listen, I know it literally looks like I can't lose. Like, it looks like everything I do is just perfect. I long the exact bottom. I short the exact top. I long day after day after day. I have no idea what's going to happen. I'm running into a big win streak, and I'm just telling you, this next trade might just instantly lose. And the reason I'm explaining that to people at the time is because I know how easy it is that they're going to start thinking, oh, you just know what's going to happen. Like, there's not even a point in using risk management, because if I just gone all in on all these trades, they're doing the math, I would have made $1.7 zillion. It's not how it works. As soon as you start thinking, and then you're just going to run into the 10 trade loss streak, right? So I always say it doesn't matter if I'm on a huge win streak. I'm not going to start saying, oh, I think I've cracked some extra level of code, and I'm going to start risking 30% of my portfolio on every trade. So yeah, you really need to you need to be really careful. That I was talking in the Discord the other day about this trader who had a pretty stellar track record and then lost $30 billion or $20 billion in 3 days on one trade after like a 25-year career as a very performant money manager. And the point is, it really doesn't matter what level you reach. You are just one moronic decision away from losing everything, and that could be at $20 billion, and he's going to prison now for fraud, for basically committing fraud to get more leverage than he should have been able to get from banks, and leveraging into position 3x leverage, by the way, something like that, 3x leverage, and lost $20 billion in 3 days and is going to prison. So it's like, don't ever think you're above just being an idiot and spiraling. Like, I talk a lot about risk management in the Discord, because one of the biggest things, it's like a minefield. It's like a psychological minefield. First, you don't know what you're doing and you're just doing random things. Then you kind of learn what you're supposed to be doing, and then you're trying to do it. But the problem is, say you've done some paper trading, you understand risk management, you're trying to implement all these things into your trading. No matter what happens, there's going to be a logic that tells you that you should be risking more, right? You're going to win. You're going to lose 5 trades in a row, and you're going to say, damn, I'm down 5%. Like, there's no way I'm going to lose 6, 7, 8 trades in a row. I'm at least going to risk 5% on the next trade and just close that 1 hour and get my money back. And you lose that, and oh my God, I'm down 10%. Like, what the heck? Okay, I'm going to risk 5% again, because it's going to take way too long to make my money back if you know what? I'm just going to take this trade. And it's not planned out. I'm just going to go long here. I may go long 10x, 10%, 1% stop loss. Oh my God, I'm down 20% in 1 day. And suddenly you've just lost control, right? Because you're not prepared for the reality of what's coming, or the vice versa. Why am I using risk management? I just won 5 trades in a row. I was only risking 1%. I'm now up 18%. If I had risked 10%, I'd be up 180%. What am I doing? Why am I even using risk management? I'm going to risk 10% per trade. I just won 5 trades in a row. And the same thing, right? And all of a sudden you lose 2 trades and you go, oh my God, I was up 18%. Now I'm down 2%. I just lost 20% on my last 2 trades. I need to make it back. I need to risk 20% on this next trade. Then I'm going to go back to using regular. Like, these are all the landmines. Or you have an average win rate over a small series of trades, 50-50. And you start thinking, how am I ever going to make money? I mean, I win 1, I lose 1, I make 1 hour. I'm up 2.5% in my last 8 trades. Like, this is too slow. I got to risk more. And it's fine. I know I'm going to win some, lose some. And then you go on the 5 trade loss streak. So the problem is you're always going to have a reason that you can just deviate from understanding the long-term prospects of your trading system. And it's really important to navigate that psychological minefield. And eventually you're going to have enough experience, like that you're going to understand. You're going to, your first 3 months are going to go by, your first 6 months, your first year, your first 2 years, your first 3 years, your first 5 years, and you're going to be like, you're going to understand these things, and you're going to be like, yeah, I've been here before. But until then, your goal is not to lose all your money, right? Learning those lessons. And a lot of these lessons can be learned without losing really any money. Eventually, there's some people that I think are more predisposed to making these types of errors, or having kind of trouble controlling some of those impulses. And I would say that there's probably some people that just are going to have a really hard time succeeding in trading if they don't address those psychological issues. Like, for some people, it's probably less of a problem. For some people, it's more of a problem. If you can't address those emotional impulses, nothing you do is going to matter. You need to take it seriously, right? Treat trading like a career, like a business. Drive with Bishop says, glad I caught your live again. Do you remember me chit-chatting with you a while back? Made about 50% today shorting, LOL. I usually risk 5% at a minimum, but my entries are top 90%. The problem I have is exiting too early, even with a plan to exit lower or higher. What you're saying right now about errors is spot on. All right, well, I don't know if I completely understand what you're saying there, but keep that risk and management intact. And congrats on the big win. All right. Well, we've been here for 2.5 hours. You know, I know there's a lot of people probably that find some of the stuff I'm talking about just like, hey, I'm not here from this. Long, short, how much leverage? Are we going to go up or are we going to go down? Clearly, I don't know, but I'm going to trade around some of these ideas with risk management. And I might not even get triggers. All right. Was there anything else I wanted to cover? I'm kind of interested in this ADA idea. There's a big bullish count X-Force Global has on ADA. I've been looking at too, this consolidation here, but I have kind of a thesis of like this potential, like Doge running, Bitcoin running, and some of the OG alts. Like we have an OG season where everybody's capitulated out of things like Cardano, and even Doge as a meme coin was sort of the least interesting meme coin. Everyone's capitulated, sold at a loss, said, let's just get into something hot. They're rotating into the things that are hot on the tops, the things that are hot, like WIF. I'm not saying this will happen, by the way. Even AI, all that stuff. They've rotated everything into all this shit, and then this stuff goes back to zero, and all the OG alts that they've sold go straight back up and end up chasing back into those at the highs. So ADA would kind of fall into that thesis as well, but it's just kind of like a narrative thesis. It's not the main reason I would trade it. I'm keeping an eye on Cardano. All right. I think I'm going to end the live stream, guys. It's been fun. Been real fun. Spirit Airlines. I just had this pulled up randomly. Just trying to think if there's anything I want to PayPal big sweep of this low. I'm gonna come fill this wick into the New York Open. Be kind of a nice idea. This was sort of anticlimactic. I was quite interested in this long setup, and I actually missed it. And so I'm kind of interested in this retest idea today. All right. I'm going to end the live stream, guys. All right. If you're interested in learning more about this kind of stuff, come join the Discord. If you're not, then definitely